Today, Ether prices take a steep dive lower. Plus, why the Memorial Day weekend could set up crypto markets for a wild ride. And we explain just what caused Terra's stablecoin to collapse. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices falling sharply as we head into a three-day weekend. By noon Eastern, Bitcoin had dropped below the $29,000 level over the prior 24 hours. Ether taking a big hit, nearly 6% lower, to fall under $1,800. And altcoins aren't doing much better. Cardano, for example, is down 7% since noon yesterday. We have the three-day weekend coming up for Memorial Day. That's always a breather of sorts for traditional financial markets, but not crypto. Exchanges remain open for business 24/7, and during holiday breaks like this, it can lead to wild market swings. CNBC's Kate Rooney can explain.
Crypto will be one of the few asset classes trading on Monday while U.S. markets are closed for Memorial Day. Analysts are expecting some big price swings. It's mainly because of a lack of liquidity, meaning there's fewer people out there trading. So just a handful of some of the larger trades could trigger an outsized spike in either direction, not just on the downside. Fundstrat pulled some data on this. They found that in recent years, crypto trading volumes have fallen off a cliff on major U.S. holidays. July 4th tends to see the biggest decline, followed by Martin Luther King Day. And you've got Memorial Day and Labor Day pretty much tied. New Year's Day is really the one outlier. There actually tends to be more trading on January 1st. Fundstrat here is looking at the average change compared to the 30-day moving average. It does also underline how widely adopted Bitcoin now is in the U.S. Fundstrat found that Bitcoin tends to perform better during U.S. trading hours. That wasn't the case 4 years ago, for example, when the asset class was a lot bigger in Asia than it was in the U.S. Another factor that could add to volatility on Monday, there's record leverage in crypto right now. That's measured by the Bitcoin leverage ratio, which has been climbing since February. It's now at an all-time high. If Bitcoin were to move sharply in either direction, it could catch some of those leveraged investors offsides and, as Fundstrat puts it, compound a move in either direction. On top of all that, Bitcoin is still very much tied to the macro outlook, which is still looking tough for some of the riskier assets, with quantitative tightening starting and the Fed raising rates. Bitcoin right now is struggling to avoid its 9th straight week of declines, trading pretty much sideways for most of the week, near $29,000.
Okay, on to the top stories. We mentioned earlier how Ether prices are getting hit today. The second largest cryptocurrency by market cap is having a rough week, down nearly 15% since Monday. That's leading to unusual liquidation activity, according to CoinDesk. Investors pulled out about $236 million from Ether-tracked futures, which usually sees fewer liquidations than Bitcoin. That could be a sign that Bitcoin is becoming a safe haven amid the volatility hitting the rest of the crypto markets. Tether is expanding into the Polygon network, making its dollar-backed USDT token now available on 11 blockchain networks. With a market cap of more than $72 billion, USDT remains the most popular stablecoin in crypto. For the most part, it's been able to withstand the volatility affecting other tokens, remaining pegged to the US dollar on a one-to-one basis. Backers of the Terra blockchain network just voted unanimously to burn 1.3 billion UST tokens. Burning cryptocurrencies, of course, means to remove them from circulation. By burning 11% of the UST reserve, the backers hope to reduce the bad debt of Terra's economy and restore UST's one-to-one dollar peg that recently crashed to near zero. With Luna pegged to UST, this mass burning is expected to help bolster Luna's price as Terra plans to bring back the token, which we'll explain more in a bit. As we just mentioned, there's still a lot going on with Terra and the fallout of UST plummeting to zero. Earlier this week, Terra backers approved a plan to revive Luna, the token tied to failed algorithmic stablecoin UST. The new version of the Terra blockchain is expected to go live overnight with a Luna airdrop at 2 a.m. Eastern. As part of the Luna revival, Terra plans to distribute tokens to holders of UST and the older Luna digital currency, which will be renamed Luna Classic. Whether or not the revival plan will work remains to be seen, but the fallout from the collapse of UST is still weighing on crypto markets and sentiment. We took a deeper look at how we got here in the first place, starting at the beginning of the Terra project. The sudden collapse of Terra sent shockwaves through the crypto industry. According to Elliptic, holders of UST and Luna lost a total of $42 billion. Major investors like Coinbase Ventures lost millions of dollars as well. Galaxy Digital CEO Mike Novogratz, he's stuck with a tattoo of Luna on his arm. It's a shocking collapse of a cryptocurrency that reached record highs, just a few weeks earlier. So we have to talk about how we got here. Terraform Labs was co-founded in January 2018 by Daniel Shin and Do Kwon, a graduate of Stanford University and former CEO of networking technology startup AnyFi. A year later, Terraform launched its governance token, Luna, with a starting supply of 1 billion tokens. Then, in September of 2020, Terra launched its algorithmic stablecoin, Terra USD, also known as UST.
In the middle of 2020, right around when DeFi summer happened in the crypto space, I came across the Terra blockchain because it was one of the few blockchains that actually had significant amount of revenues. They made a lot of network fees, and what made them unique was that they had one of the first, decentralized stablecoins that actually saw real-world traction with, millions of users in South Korea.
Let's take a second to talk about algorithmic stablecoins and how they work. Stablecoins are called that because they're designed to remain pegged to a certain price, usually $1. Traditional stablecoins are considered over-collateralized, meaning the token's operator holds real fiat currency in reserves to support the stablecoin's price, $1 for $1 worth of that token. Algorithmic stablecoins are considered uncollateralized. They don't use fiat currency to back up their value. Instead, these tokens operate on a network alongside another cryptocurrency. They maintain their pegs through algorithms that encourage traders to take advantage of price changes in both the stablecoin itself and that secondary cryptocurrency, in this case, the Luna token.
So the idea is that at any given time, you can trade in $1 worth of Terra USD against the protocol for $1 worth of Luna, and then vice versa. So you can sort of think about Luna as absorbing the price volatility of Terra stablecoins.
And in the 2 years after its launch, UST and the Terra blockchain saw insane growth.
Terra has really evolved into being more than just, an algorithmic stablecoin. It has also become a layer 1 blockchain. And it went from being an underdog in 2020 to being, a top 10 crypto and really on its way to being the #1 stablecoin in the world.
One huge driver of growth was a service called Anchor.
The Anchor protocol is a borrowing, saving, lending platform inside the Luna ecosystem. The mechanism there was if you are a saver, so you can deposit UST and earn 20% yield, which, sounds too good to be true. On the other hand, you could borrow UST and you pay maybe 25% in APR, but there's a mechanism called the distribution APR where you are actually being paid anywhere from, let's say, 25.1% to maybe even over 100% for borrowing. So if you log onto YouTube and you search for videos around how does Anchor protocol work, you're going to find a bunch of videos that are like how to make passive income by borrowing on Anchor protocol.
With all this attention, UST surged to an $18 billion valuation. And to maintain that value, Do Kwon turned to Bitcoin to support Terra USD's reserves.
We usually buy about like $150 million clips every few days. And we do some of those things through board resolution. So that really depends on how fast people get back. But I would say we've bought about $1.6 billion so far. And I think by the end of April, we should be at around 3.
This latest move rallied the so-called lunatics, pushing the price of a Luna token to an all-time high of $119. But crypto markets have struggled so far in 2022, with growing concern of a recession and bear market. Bitcoin's price was slowly falling, and fears of a crypto winter were rising. For Terra, those fears culminated in the second week of May.
I'd say the trigger was on May 7th, when on the platform, a decentralized finance application platform called Curve, which is often referenced by traders to assess the stability of the peg of stablecoins, there was a major trade that was made where someone came in and exchanged $85 million of UST for another stablecoin. And this started to cascade into additional exits in these liquidity pools. And this caused the initial depegging and the beginning of the spiral. The next kind of key event or moment would be the series of exits from Anchor protocol. Luna really should have a much higher market cap than UST for the entire ecosystem to be valuable and facilitate these redemptions. However, in this period, the market cap flipped, and this further exacerbated the legitimate fear of Luna and UST holders, thus deepening the spiral as more people were fleeing for the door. Then essentially, I'd say the last piece is the deep hyperinflationary spiral. Luna hyperinflated over 8,000% in a matter of just 2 days, and there is now trillions of Luna in circulation. This is all augmented by the fact that this ecosystem was under-collateralized by its Bitcoin reserves, so people are incentivized to not be left in the dark and flee for the doors and be the first out.
That's all for this week, but we'll be back again next Tuesday after the Memorial Day weekend. See you then.